When does Covered California update your income? I'll answer that question right after this message from me. Did you know that Kevin Knaus, me, I am a mediocre self-published author of history books. My second one is a biography on Benjamin Norton Bugbee, who lived along the American River and was a California 49er. And also really fascinating book on the history of Folsom Lake and what you can see underneath it during drought times. You can find both of those books on Amazon. So, getting back to real important topics, when does Covered California update your income? Never. You update your income. Your income estimate that goes into determining your subsidy and whether you are Medi-Cal eligible is not automatically updated by Covered California. You must update it yourself. And this is kind of a misunderstanding because of different things that have happened either in Medi-Cal or on other situations within Covered California, but it is the consumer who updates the income. Covered California cannot see your income tax return. They don't take that number and then automatically update it in their system. They rely on you to do that because income taxes are really fairly complicated, and you are estimating your income in Covered California and for the coming year. And of course, things are always different at the end of the year. So you need to get in there into your Covered California account and update that on a regular basis. And one of the misconceptions is that when you upload your income tax return to verify your income, somehow Covered California takes that and updates your estimated income, and they don't. Now, if you do not update your income, you might get put into Medi-Cal, and that is because of the federal poverty level creep. Every year, the federal poverty level income amount increases 1 or 2%. So if someone comes into Covered California and says they are going to be making $17,500 a year for an individual, well, that was good like in 2018, but in 2020, the level of income to be eligible for Medi-Cal was $17,609. Well, if you had not changed your income, all of a sudden Covered California says, well, you're below the Medi-Cal level, therefore they assume you're Medi-Cal, and then they push that information over to the county. Because again, Covered California does not automatically update your income. The consumer has to do it. Now, how does the income get updated? A couple different ways. First, you can call Covered California and tell them to increase your income. You can get into your Covered California account and change it yourself, or you can contact your agent and have them do that. And I routinely do that for my clients because even changing your income, that's going to change your subsidy, and it's going to may change some of the other stuff. So you have to kind of think about what's going on and if that number is correct. Just because you had a banner year in 2018 or 2019, and you don't think that year in terms of income is going to continue on in the new year, you do not need to raise your income to match the past year's income tax return, your adjusted gross income, because you're estimating your income for the future year. Now, if your income is too high when you do your taxes, too high relative to what you estimated originally, you may have to pay back some of the subsidies. And that's what Covered California is trying to protect you from. They're trying to protect you from having to repay a whole bunch of the subsidies you got during the year because your income was too low versus what your final modified adjusted gross income is. Now, Covered California will adjust your income in one particular scenario, and that's if they request income verification from you. Now, when you estimate your income, Covered California goes out and they check federal databases, and they look at your last adjusted gross income from your federal income tax return. If your estimated number is plus or minus, outside plus or minus 20% from your last AGI, that triggers an income verification. And then that's when some people will supply their 1040 as verification, their tax return, or an income attestation. But if you do not provide Covered California with the income verification that they can readily understand, that's why they like the income attestation forms, then they must assume that you have zero income and they drop it to zero and then you go into Medi-Cal. And you don't want that to happen. But that's the one time Covered California in that particular scenario will adjust your income when they cannot verify it after they have asked you to send them proof that you are going to be making what you have estimated. Now, if you're in Medi-Cal, and this is another area that kind of creates the myth that your income is just automatically updated based on different federal or state databases. If you're in Medi-Cal, you must report your income changes to Medi-Cal, and they make changes in your Covered California account. This often happens if there's a family where children are in Medi-Cal. As an agent or you, if your children are in Medi-Cal, all income changes must be reported to Medi-Cal and they make the adjustments because you have to show proof to Medi-Cal that your income has gone up or it's gone down. If you go in there and make any change to your income, I got a job, it's $2,000 a month and changing it in Covered California, Medi-Cal is going to get in there and say, we don't see any proof of that, and they swat it down. But if they receive the information from you, the pay stubs, then they will go in and automatically adjust it. And then if your income is high enough, then they will release you from Medi-Cal and you can get a Covered California plan. And I think that's probably what's happened with many people is they have been released from Medi-Cal after Medi-Cal has adjusted the income with the verification that the consumer has provided. And then there's just a sense that the income will automatically be updated, but that's not the way it works in California. You have to provide the income changes within your account. So hopefully that kind of dispels one of the myths out there. And for Covered California, you need to be proactive. You need to think about your income and adjust it accordingly because it's all up to you. Thanks for watching. I'm Kevin Knass with InsureMeKevin.com. Have a wonderful day.